Hi, everyone. I'm very happy to be here with you all in this space. We're going to be covering a very insightful and personally cool report, insights that we've been able to put together for you guys. And very excited to share with you the highlights, and hopefully it brings some light into the day-to-day work that you're currently in. So thanks again. If we go to the next slide. Um, so here I'm David Goldschmidt, and I lead the business development business for transfer solutions for Mastercard in Latin America. And just to make it into layman terms, what that means, um, Mastercard, of course, has the cards. You've seen them everywhere. But in the past 10 or so years, Mastercard has heavily invested into new payment flows, right? So think of uh, payments beyond cards. Part of those payment flows is the business unit that I work for, which is called Transfer Solutions. And within that umbrella of solutions, we are also covering transfers, whether it's domestic transfers in the context of today's conversation. These are going to be cross-border transfers. And these business has been making quite a bit of a disruptive steps into our region here in Latin America. And we will cover today um, why that is, how that is, and hopefully it connects to your needs and to your organizational needs. But we didn't do this study alone. We had the pleasure of engaging with PCMI consultancy, and we partner especially with Dr. Ignacio Caraballo, who's here with us, and he will be walking us through the insights of the analysis that we were able to gather for you today. If we go to the next slide, the study, it's in the white paper or report form. You see the cover page on the right-hand side of your screen. And if you would like to get access to the report, which I highly encourage it, it's actually a super easy read because what we've done is we've created at the beginning of the white paper an executive summary, which is a couple of pages long. So if you have, call it less than 10 minutes, you can read through the entire paper. Or if you have more time, weekend reading, night reading, or if you want to just like go through the whole paper, is very well structured, well connected, and you can scan the QR code here. There is also a link that is being posted now on the chat where you can download, the request for downloading these report. If we go to the next slide. So let me give you a little bit of context before we jump into the insights of the study, and why did we focus on this particular topic of cross-border transfers within the small and medium-sized enterprises? And let me give you a little bit of context of the SME term, PYME, for those who are in Latin America and more used to that terminology. Uh, the definition of what is a PYME and what is an SME varies drastically. So if you go to larger markets like Brazil, the definition of an SME could be a significantly large corporate in a small country in the Caribbean. So in reality, while our focus is SME, these applies to medium-sized enterprises as well. So maybe not the super large corporates, but anything that we do would be very, very relevant for medium-sized corporates and below. Um, and the reason why, when we looked at international transfers, um, and many of you have probably done some of them for personal needs, And it has a lot of hurdles, has a lot of challenges. When you look at the outflow volume of transfers from Latin America to other markets in the P2P space is a much, much smaller number than the business payments that these enterprises are doing. Think of imports. Um, so when we started, not that it's not relevant, the person-to-person flow or the remittance world, it is absolutely important. But we started with these report and white paper in the SME segment because that's where the majority of the flow lives today. And what's absolutely crazy, and you will be seeing it throughout the report, is how broken it is. It's amazing how you can go with your card to Thailand at a merchant location and you can purchase for a Coke and they give you the Coke right away. And the merchant in Thailand knows that he or she is going to get the money. But once a company here in any place in Latin America wants to make the same payment, a transfer, but now instead of buying the Coke for that merchant, now wants to buy wood from that merchant. Now all the challenges appear. And we will talk about what those challenges are, but it's absolutely broken. So our study and our work does a very systematic analysis, both of leveraging public available information, which is important, but more importantly, we did a methodology which we will be talking shortly to properly size and understand what's happening, like what is really going on. And we take one step forward, and not only do we identify what those challenges are, but we help lay out a path. And this story is not about payments. This story is about segments. Let me explain what I mean with that. The reality is that the payment is the principality of a business, of these enterprises, meaning the majority of interactions these companies have with their financial institutions or fintechs in some instances is through the payment. You can check your balances, but the actual taking action is through payments. So the proximity that these enterprises are able to draw to this financial institution is through the payment. So if you are providing a good experience that meets the expectations of these enterprises on a day-to-day basis, you can keep your client. But if you're not meeting those needs and someone else will, there is a chance that you may lose that client. And therefore, the payment no longer becomes an element of revenue for institutions. It becomes your anchor of holding the client, of being able to grow that relationship. So the report is a focus on analyzing and understanding what's happening in the industry, explaining, number two, what are those structural deficiencies, these issues, these problems. And number three, what are the options? What are the paths that you guys can take, whether directly or indirectly? You may not be the decision maker, but you may play a role in that path. If we go to the next slide. The way we did that, so that I can kind of burst a little bit that what is David talking, right? We did three things. So I'm going to start right to left from what you see on the screen. Public available data. We had to get public available data reports. So the PCMI team did a great secondary research effort, roll up their sleeves to ensure that we were not missing anything big that everyone should be or already knows. We also did interviews, but not one, two interviews. We did 34 interviews. Well, PCMI team did 34 interviews. And the interviews not only went to banks, but we also went directly to those affected on a day-to-day basis. We interviewed 18 small and medium-sized enterprises. And what I call the jewel of this work, which is what you see on the left-hand side with the 70 cross-border transactions, is we did real transfers to understand what is the real cost, the real time that it takes a transfer to move from one place to the other place. What were the issues? And let me explain why this is so innovative. And we're the first ones globally that have done these in a way that we can put it into a report and share it with you guys and our clients and our potential clients. So when you do today a transfer from your bank, you can have anyone do that, right? So you can have your friend, your family, yourself, who works at a company. Hey, can you do a transfer and send the money to X place? Call it, I don't know, Asia. Sure, that part you can do, and you know how much it's going to cost the individual. But what you don't know, as crazy as that might sound, is you don't know when the money will arrive. You don't know exactly. You know more or less. You don't know how much the transaction will end up costing because at the end of the day, you don't know how much money was deposited in the bank account of the exporter. You know, they charged you in dollars, maybe, but you don't know how much money ended up being in the bank account of that uh, company selling you the goods. What the study did was something extremely simple. So we hired this mystery shopper company, K2, a consultancy, and partnered with them with PCMI. And what we did is we took the most important or a set of countries of companies that were importing goods from the most relevant importing markets. So think of the United States, China, Europe, et cetera, et cetera. And we did these test transactions. We took screenshots of the invoice when the money left. So we knew exactly how much was charged to the sender, which you can all do. But what was very unique about the study is the other side, because this company also knew the beneficiaries, basically the company exporting, and they had the same screenshots once money arrived to their final location. We had the same screenshots of their online banking platform. So we were able to capture the total real cost of the transaction. How long did the transaction actually take? And were there any challenges along the way? Of course, we don't know what happened in the middle, but we know what happened at the end and we know what happened at the beginning. And those results, what we did for you guys is we simplified them. We made them chewable. We made them easy for you to digest and understand. And this is exactly what Ignacio is going to walk you in the next 20 or so minutes from this analysis. Ignacio, welcome to the webinar. It's a pleasure to have you here. Thank you for being such an amazing partner throughout these project, which, by the way, guys, took several months. So welcome.
Thank you. Thank you so much, David. And thank you everyone for joining us today. It's a pleasure to be here presenting the results of this fascinating project. Please, guys, I will present you the main insights, but remember that you have a Q&A button at the bottom part of your Zoom screen. Just drop all the questions or doubt that you might have, and we will do our best to address them at the end of this presentation. We will leave 10 minutes or so to discuss it with you, all right? And first and foremost, please download the report, all right? You have the link as well. Just do a click and you can download it after this presentation. So to begin, let's understand the broader picture here. For Latin American SMEs, the international trade is emerging as one of the most powerful growth engines. Global commerce unlocks, all of you know this, but it unlocks better suppliers, broader market, new business model, and with the digital adoption accelerating, the SMEs are probably now better than ever positioned to seize these global opportunities. In this scenario, cross-border payments, the cross-border and all the international infrastructure for doing payments, for doing international payments, are the key enabler, the natural and the key enabler. In our study, we found that 60% of SMEs already engage with international suppliers, specifically in very relevant markets of our region, like in Brazil and Mexico. 75% of SMEs are looking to further expand these international connections. And the numbers are just astonishing. You can see in the right part of the screen how Latin America have a $1.4 trillion opportunity. And it's not only the size, it's the speed of growth, because our region is growing twice the global average. The compound annual growth rate is 6% approximately in the global average, and for Latin America it is 12%. So 12% a year this market is growing. However, if we go to the next slide, please. Despite all of this potential, as David was saying, the SMEs still face significant challenges when they want to do any kind of cross-border payment. So even when they are ready to go global and when it is absolutely necessary for them, the infrastructure supporting this international payment is outdated and misaligned with their real needs. I'm speaking about the traditional correspondent banking system, which, as we know, was created several decades ago in the middle of the 70s, and it was created primarily for large multinational corporations dealing with high value transactions. So as a consequence of that, today's cross-border banking system burdens SMEs with excessive cost, delays, and lack of transparency. And that's why, as David said, we partner with K2. We did not only a very deep qualitative research with interviews with SMEs and banks, but also 70 real-world testing transactions. We tracked these 70 cross-border payments across 8 countries and multiple banks and multiple corridors. And with that, we had the chance to analyze the fees, the exchange rate, the processing times, and of course, the service quality. Next slide, please. So what did we find? Well, by first time we put this in numbers. I know that if we speak about speed, transparency, and cost, it sounds like, yeah, we all know that there is a problem there. We all know that there is a pain point there. But no one has ever before put that in number for our region. So our testing uncovered a system that is not just inefficient for the Latin American SMEs. It is actively working against them. The costs are excessive, the conversion are hidden, and the speed is inconsistent. This is a problem for the SMEs, and as we will see, this is a problem, but of course, a huge opportunity for you, the banks or the originators in Latin America. Let's review each one of these, or at least the main findings for our region in each one of these 3 very, very well-known pain points. If we go to the next slide, please. One alarming discovery from our research was this, I will say this disproportionately high cost that the SMEs face for smaller valued international transfer. So the average of the cost can be, in average, 23% or 2.2%. In some corridors, it was over 30%. We're saying that if an SME wants to transfer $250, they can pay 23% of that, is almost a quarter. But even in higher value transactions, like $100,000, that can cost about $2,200 per transfer. That's ridiculous. It's insane. This is insane for an SME. That's insane. So such exorbitant fees, especially frequent in these key trade corridors, like between Japan and Mexico, for instance, this strain the SMEs already tight profit margin. So this high cost creates significant barriers for the SMEs that are looking to expand globally, and this also risks the relationship with the bank. I will speak about this later, but in a few words or in a nutshell, this means that it risks the credit, the working capital service that you might provide, and all the package of services that you provide to the SMEs, and above of that, the personal services. This is very interesting, but if you lose the SME's corporate account, you will probably lose the personal account of the founder and of the founders of that SMEs. So in this slide, you are seeing just in a nutshell some of the numbers. In the report, you will find a lot of information about the specific corridors, etc., etc. But again, the big message here is this is not prepared for low value transactions. This is not prepared. This is not the correspondent or the traditional correspondent banking system. If we go to the next slide, please. Beyond these high transaction fees, the SMEs also face hidden cost, or what I like to say, a hidden threat. And this is the lack of control over the currency conversion. Because another critical issue that we identify is this hidden FX cost. Today in Latin America, 9 out of 10 USD payments are automatically converted into local currency the moment that they arrive, without the sender or the receiver consent. Worse still, these conversions often happen at a non-competitive exchange rate. You will find a lot of information about this. But who earns money here with this FX? We know that the cross-border payment business is basically fees and FX. Who get that money? Are the Latin American originator institution? Well, the answer is no. That money is lost in the middle and at the end. So it means that the SMEs are losing money without even knowing it, and that every international payment is worth less than expected for them. And for you, for the originating banks or the originating institution in Latin America, this is a huge opportunity to determine the effects by paying in local currency, right? Next slide, please. And finally, of course, this is not a novelty news, but again, we put numbers on this. The speed and the predictability, which is critical for SMEs operating internationally, it really lacks the needs of the SMEs. We found that 40%, imagine this, 4 out of 10 international transactions that are not going to the United States exceed the 4 days delay that we usually listen, that is between 2 and 5 business days. 2 and 4 business days is what the traditional correspondent banking system delay. Well, in Latin America, 40% delays more than that, and nearly 20% exceed 10 days. 10 days. In our 17 transaction, 11% completely failed. Completely failed. And in regions, in very relevant regions, such as Brazil, the situation is even worse. It's much more concerning. 80% of transactions experience significant delays in Brazil. So these uncertainties not only disrupt the SME's operation, it impacts in the relationship with the suppliers. It means delaying the shipment. It means affecting the payroll management. It impacts directly in their operational cost. That's why the SMEs demand services that mitigate this operational risk. And from our conversations with SMEs, if we go to the next slide, again, we spoke with 18 SMEs that make international payments around the 8 markets in Latin America that we studied. The SMEs have clearly expressed what they need. What do they need? They want cost efficiency, speed, transparency, and seamless integration. And these are not aspirational goals. These are operational imperatives. A factor that is key over all the needs. Again, you will find a full section here in which we will help you to understand what is in the mind of the SMEs when they are doing a cross-border transaction. And again, believe me, the last thing that they are thinking is about the transaction itself. Again, sorry, the last thing that they want to be thinking is about the transaction itself. Because a factor that is key here is that the financial services should help them to earn and to make money and better businesses. And time is money. So as the SME has selected, and Maria Barredo, the SVP of SMEs in Latin America, you can find the quote over there. I love this quote. Time is an SME's most valuable asset. They need solutions that integrate into their daily operation, not add complexity. So again, in our report, you will find a whole section about this, and you will find a blueprint to help you to truly understand the SME's needs. You will see how everything is related with operating their business and the operational cost that dealing with cross-border payment brings. They don't care much about anything else. They don't care about the financial product. They care about growing their business. So last but not least, what about the banks? What about the financial institutions in Latin America? If we go to the next slide, please. From our conversations with banks, we also provided evidence that I will say you guys, because I understand that the most part of the audience here are banks or financial institutions related with SMEs cross-border payments. You feel the pain too. You feel the pain too. This is not only a problem for the SMEs or for the economy as a whole or whatever, but the other side of the coin is that you have everything to gain here. You have everything to gain. In our 12 conversations, the banks confirm that these inefficiencies create costly pain points for them. And not only because they are expensive for the banks. This is very interesting, a very interesting finding. Again, this is qualitative. Unfortunately, this is not quantitative. But from our interviews, we found that just 50%, it depends on the banks, of course, but above, on average, the 50% of the cost related to an international transaction is the corresponding banking fees. And you will say, okay, what is the other half? Where those costs came from? Well, the true cost for the banks when serving SMEs through the corresponding banking system is related with back office, manual processing cost, and customer service support. You can see in the top of this slide how the digital incumbents are growing in the cross-border sector, but like the fintechs are earning market share here. So modernizing is not optional for the banks at this point when serving the SMEs. It is essential. However, we have a very good news that we found in our report. So if we go to the next slide, Abel, please. The good news here are that banks still hold the relationship. And this is key. This is key. You have the advantage. 75% of cross-border flows currently pass through you. So maintaining this leadership, of course, it demands reinvention. But remember, the SMEs don't need product here. They need integrated, reliable solutions to run their businesses. So the banks must think how you should serve this segment. The good news is that the conversation with banks and the conversation with SMEs, the SME founders in Latin America, they still looking into their bank as a partner. You have the relationship, but you should rethink how you serve this segment. So finally, in our report, we present, this is PCMI proprietary, we present 4 different strategic actions that the banks can do in order to leverage all the digital revolution and trends and new technologies to provide the SMEs what they need. And we divide those strategic recommendations in 4 actions that you can see in the screen and you can read in the report. The first one is to segment the SME customer to deliver a very much personalized and customized solution. The second one is to prioritize the cash flow management and the operational efficiency above all, and of course, transparency as well. The third one is to offer real or near real-time tracking and automatic compliance to streamline the process. And finally, and this is probably one of the most relevant in terms of what we will be showing you in the following 10 minutes or so. Finally, to adopt modern rails to replace your correspondent banking service. So, yeah, service, no, as an alternative, to correspondent banking, at least for small value flows. So the SMEs want speed, transparency, cost efficiency, and control. And if the banks modernize the cross-border offering to meet this expectation today, when you still hold a relationship, so for sure you can not only deepen that relationship, but grow in revenue, and of course, protect yourself from the digital incumbent disruption. All right. Next slide, please. So this 4 point is very, very relevant for our report. We believe that this recommendation will help you not only to grow in more businesses, but also, again, to protect your business. But adopting a modern rail is very much the key here. Again, you are not only competing with fintech, you are competing with blockchain, you are competing with closed loop wallet, you are competing with RTPs becoming global in the world, right? In Latin America, that's not happening yet, but believe me, this is very close. This is around the corner. So, in order to understand this, all of these pain points and how Mastercard can help you, I will hand over to you, David, again, so you can explain how Mastercard Move can address all these critical needs, all these pain points that we have found in our report. Thank you very much.
Thank you, Ignacio. Thank you for taking us through the very insightful results. And again, thank you for K2 for putting together the data that helped provide the quantitative piece for this analysis. So if we go to the next slide, we didn't cover this in detail before, but I will. The first question is, why are transactions not flowing instantly, right? Why is it that I can go with a card and get the Coke in Thailand instantly, but yet when I have to do a transfer, then it takes days, as Ignacio was saying, and costs insane amount of money. The reason is because how the model works. And this is a model that the way it started, and it became kind of like the standard and the only way, and is through correspondent banking relationships. And you guys might have heard of Swift. And the way it works is very simple before I go into the Mastercard Move solution. So you understand what is it that we bring to the table, which is quite unique in its construct. So the current model, if I wanted to send the money with the card to that place in Thailand, Mastercard has a network, meaning the bank in Thailand belongs to the Mastercard network, the bank of that merchant. So whenever we have to send the money to that merchant, the banks of the merchant, we, Mastercard, have direct access to that bank to move the money. So basically, we play that intermediary role. When you look at the correspondent banking world, it doesn't work like that. It works through different steps of correspondence that sit in that middle of the transaction. So the way it would work in majority of the cases is, let's say I need to buy that wood, and I'm currently sitting in Colombia. So I would bank, let's say, with Bank A in Colombia. That Bank A does not have a relationship with the bank in Thailand. So therefore, this Bank A needs to have another relationship. This is called a correspondent banking relationship that may have a relationship with that bank in Thailand. So let's say Bank A in Colombia has one of the large international banks called Citi, Wells, JP Morgan, HSBC. So they have a correspondent banking relationship. So they have accounts with each other. And you hope that that Citi, HSBC has an account with that little bank in Thailand. But the likelihood is that it won't. So you need another bank, another correspondent for HSBC or this large bank, and so on and so forth. So the reality is that you ended up with 4 or 5 intermediary banks, each one with a book of correspondent banking agreement and relationships. Of course, each one takes a piece of the economics, and at any of these hub stops, there could be delays. So of course, you can have the best messaging possible, you can create the best standards possible, but if you don't remove the intermediaries, you're going to be facing delays and economic challenges. So what is Mastercard Move and why do we bring? We changed the way things work. We bought a number of companies that had already a network. We obviously Mastercardized it. But what we do is very, very simple, and it's what's shown on this slide. So in each market that we operate, of the 170 plus markets that we operate, in each of those markets, we have a relationship often with 2 or more financial institutions, which is what you see here in the center as the network of partners. And that entity in each market connects with the local real-time payment infrastructure of that market. Think of the ACH. Let me bring examples so you become a little bit more connected to the model. So in Brazil, I have at least 2 financial institutions that are connected to Pix. In the UK, with faster payments. In Thailand, with PromptPay. In Mexico, to Spay. So the way it works is we, using MasterCard funding, we pre-fund with local currency that entity at the destination. So I have today Brazilian real of MasterCard sitting in that institution in Brazil. So as soon as I get a notification of someone that needs to make a payment in Brazil, the only thing I have to do is I send that last mile through the local rail. So that way, if the market has real-time payment enabled, I can reach real-time payment and destination, and I pre-negotiate with that institution the economics of that transaction, which allows me to do know beforehand how much money will arrive, and therefore I can provide better economics, not only in terms of the actual amount, but in terms of the visibility, the transparency of knowing how much money will arrive to the final entity. So that's the way the model works, and we have this network all over the world. In some instances, MasterCard decided to buy the entity connected to the real-time payment infrastructure. So basically, we vertically integrated. So let's take as an example Mexico. We bought a company called Arcus, and that's our company. So we pre-fund Arcus, which is a MasterCard company, and Arcus connects to Spay, which is the local real-time payment infrastructure. So that's how we have a differentiated model that allows us to reach instantly over 70 markets globally, and that allows us to have pricing and service levels that are not even remotely comparable to the traditional correspondent banking model. If we go to the next slide, there's going to be a little video that we're going to be showing you that explains what is that user experience. So now the person is entering the portal of the enterprise in the origination market to make the payment for that to the exporter. Then you see here, the provider was a TLB lighting, so it's already pre-registered in their UX. You can build your own UX. You don't have to use Mastercard's. And then you can see here that the price already comes with the exchange rate. So you know exactly how much money, if you see in the bottom right, received amount, you already see how much money will be received by the beneficiary before the transaction takes place, something that with correspondent banking and SWIFT, you can do. So you see the flow of the transaction itself is quite smooth. You can adjust whatever experience it is to your traditional UX experience of your online or mobile banking application. And of course, you can leverage the benefits that we previously mentioned around speed, cost, and service levels. So if we go to the next slide, we spoke about this, but at all, basically all comes to saying we have a model that can deliver faster, more transparent, and safer payments as a result of less intermediaries, a Mastercard's robust security and safety platform. If we go to the next slide. So here is, I think, where we start to connect the dots. So if you're an SME, and I think Ignacio was saying as quoting that the most valuable asset for an SME is their own time, right? When you look at these companies that are operating under a very, call it lean model, and by I mean lean is they don't have an army of people working for them, right? So you have call it a couple of accounting people, and they're struggled with time. And at the same time, they struggle with capital, like working capital. And you see all these SMEs, and one of the main threats that here, not only in their interviews, but this is public available data, and of course our SME leads here at Mastercard hear it directly, is their need to operate their day-to-day business from a cash flow perspective, liquidity perspective. So I find it always ironic that these SMEs, they go out and they get loans and they pay pretty high rates for those loans. Call it, I don't know, $50,000 loan at 10%. But at the same time, that $50,000, it's getting stuck for 2 or 3 weeks in the payment. So it doesn't make sense. It's better not to get the payment stuck and to avoid having to pay 10% on those cash flow needs. Another pain point that they live on the day-to-day basis. They need to send money to their exporter for their imports, and for them to get the container. And the exporter gets $1,000 less. So then the exporter is not sending the shipment. So forget about the hassle that, of course, the team have to do to send the extra $1,000. Now the inventory cycle and turnover is getting directly impacted. So therefore, they cannot sell the goods. They cannot sell the good. They don't get the cash flow. Like the capital, access to capital becomes even more of a challenge. So if you come to think about the importance of having streamlined payments for the SME business, it becomes at the core of their operations. And that's what we're trying to do. And yes, there are other providers out there, but in Latin America today, Mastercard has the best offer in terms of countries that we can reach, in terms of the model being serving SMEs versus only people through the model that I explained before. If we go to the next slide. So here I would like for the audience to think on what could be your role, right? Not everyone is leading the international payment business, but you can play a role. And this is not a Mastercard play. this is an ecosystem play, meaning how can you make this place a better place for enterprises, for business to conduct efficiently? Is there any space for you to influence within your organization? Do you have any further questions? Anything that can empower your area? And for this, I would like to pass it for Ignacio. If there is any questions for the audience, I'm super happy, or Ignacio, super happy to answer them. And again, I would like to thank everyone for your time, for taking in the middle of the day an hour to hear us out. And we're here for you in either through the questions or in any other query you may have. Thank you.
Thank you, David, so much, and thank you everyone for staying until this point. We're in the last 15 minutes, and we have received a lot of questions. David, I must tell, all the questions, or the most part of them, are about Mastercard Move, so you will have to answer them. Let me
Sure.
just pick up a couple of them, so we can see if we can answer all of them, hopefully, or the most part of them. So one of them is, given the SMEs demand for embedded finance and platform native experiences,
Mhm.
how is Mastercard Move approaching the API modularity to support vertical specific use cases like B2B marketplaces or ERP connected supplier payments?
Yes. So good question. So at Mastercard, the SME as a segment is managed holistically within different branches. So there is areas that are focused on the credit side of the house or the day-to-day. That's my colleagues in Latin America, Maria Barreiros. Then we also have another branch within Mastercard that is Mastercard Advisors, which can help consult and bring strategies both at the strategy, implementation, and execution level. And then we have cyber security solutions, um, and then and last our team that manages the part of payments. So holistically, we can look at the needs of an SME and try to identify ways for you to be able to serve them effectively. Now, with regards to the modularity of the APIs and how do you plug in within your context. So um, most of the solutions at Mastercard um, are built so that you can basically leverage your existing UX and front. Um, in our case, it is the same as well. Meaning, so if you have already a platform that you're using to serve your SMEs, um, you access our service. You could access. It's not the only way, but you could access our service through APIs. And I'm sure if you're interested on more on the credit side of the house, or we can also look into putting you in touch. Please send us a note after with the team that respectively manage that that side of the house.
Yeah. Thank you, David. Yeah, and absolutely, you will have our email directions in the report. So please write David. There are some questions here about the structure of the cost, etc., etc. But this
Perfect.
is a good one. I mean, I have the experience of have read the 12 interviews with the financial institutions, so I have the idea. And at PCMI, we're speaking with the industry pretty much every day, the whole year. But this is interesting in order to put this in numbers. Have you seen at Mastercard, have you seen measurable changes in SMEs retention as a result of adopting Mastercard Move? Or particularly, the question is in corridors where FX spread and settlements delays previously erode trust. But this is a great question, because what we found is that the
Good
pain
question.
points for the banks is not only because of the cost of Swift or the corresponding banking, but also because of all the backend. So
Yeah.
have you measured that, or
Yeah,
do you
it's
have
it's
it?
so the opposite, because I mean we're relatively new in the region, so I would say 2 years commercializing this. So the fruits are starting to pay off, meaning the project takes time to implement. The solutions are in many of the cases under implementation. I can tell you I've seen the other the other numbers, meaning because there are fintechs that mostly in Brazil. and they're starting to be in Mexico, that had played a role on going direct to these SMEs to offer them an alternative for uh, basically for these international transfers, for payments of supplier payments. Um, and we have seen those numbers become very, very relevant. Um, uh, and as a result, some of these banks are losing some of the customers, especially because some of these entities now are starting to offer full-fledged financial services. Let me give you some numbers so to give a little bit of context. And Brazil is public available data, so anyone can download this from the central bank data. So the market was regulated in Brazil. In 2020, they had about 5 or so million transactions of FX cross-border, um, uh, and the market got unregulated. Think of Argentina being unregulated now. That's kind of what they went through from 2020 onwards. Now they're close to 30 million transactions. Um, and, and what's fascinating is that everyone grew. So all the banks, the large banks grew, and so on and so forth. So everyone was happy that they're seeing their numbers go up. But 60% of those 30 million are now in the hands of a handful of fintechs that are not the Itaú, Bradesco, Banco do Brasil, um, Santander type of players. And they started with the cross-border transfers, and now they're having full banking licenses and are starting to offer full credit uh, type products plus cash balance accounts. So to your question is, I think we are the tool to defend against that. I think numbers are more clear on the loss than on the retention. But I'm confident that if once we start to mature some of our solutions, they will become super apparent, and the ability for banks to retain their clients.
Awesome, awesome, awesome. Great stuff. I will mix two questions here. If you can explain a little bit about like some technical or specific details about Mastercard Move, because there are some questions about the transaction limit, the cost structure, and if it is possible to integrate everything via an API. I
Yeah,
don't know. Can you explain a little bit to
yeah, I
us?
can touch on all those three topics. So I'll start first. I'll start first on the connectivity, on the way to connect. Then I'll cover how does the fee cost structure works, and I will cover the third one with the transaction limits. I think those were the three questions within that same question. So you can talk to us via APIs. That's our preferred way. Why? Because we have a lot of services that come with APIs that may not be accessible with the other ways you can talk to us. Um, and I will explain them after. But our preferred way is yes, connect to us via APIs. Um, if your organization is a little bit less API savvy, we can also take more standard messages. For example, we can take Swift messages. Um, Mastercard has a Swift BIC code, which is basically the address, like we're a Swift participant. So you can send us the payment instruction the same way you would be sending it to your correspondent. And then we take that Swift message and we convert it in the backend to APIs, and we continue the rest of the transaction flow using the API ways. And we have three or other ways for you guys to talk to us. Fee structure is super simple. Can't get simpler than this. We charge two elements. We have a fixed element and a variable element. And the variable element, we charge it when we are doing the effects for you on your behalf. The fixed element, call it between $2 and $5 per transaction in very simple terms. And then on the variable element, we have a spread, basically a percentage, on top of a benchmark that everyone knows. Call it a Reuters bid. So that way, what it allows you to do is like when we are talking about pricing, and call it it's $5 and 50 basis points on top of Reuters for xborder. you can already know how much the transaction will cost. So that's how the fee structure works. Of course, depending on the corridor, depending on the value of the transaction, the numbers I'm giving you were just illustrative. Third, limits. We do have limits. We often go between $100 to $200,000 per transaction. Um, there are certain corridors where we can request for exceptions to get higher transaction volumes. The reality is that the majority of the SME payments fall below the 200,000 mark. And for P2P payments, the number is 25,000, so it's a bit lower. So I think I covered the three questions within that one question.
Awesome, awesome, awesome. And there is a great question here that I want to ask you, and I will take the I will do a comment here because we did a very nice report with Mastercard. We are part of Mastercard. I've been part with you guys, I think, for the last 10 or 15 years or so, and we did an amazing report about remittances. So here, one of our participants is asking, how do you see this solution versus P2P solutions that could also fit the SMEs? And again, I'm
Great
saying
question.
this because in our remittances report, we also showcase how the Mastercard Move solution is
Yeah,
basically
yeah,
for everything. That's
yeah.
why you rebrand, you
No, it's a
change your
very
name,
good question.
right?
Very good question.
Awesome.
And I should have mentioned this before. So the same platform and connection that you're doing for the SME applies for P2P and remittances as well. Um, so from a technology perspective, it's the exact same solution. Um, the reason why we focused on the SME side is because, of course, the pain, as I mentioned at the beginning, is so much larger from a volume perspective. That said, I personally have many clients, many and not small, large financial services entities that started the project on the P2P side. Um, there are several reasons. Each institution has its own. Maybe they have the ability to, because organizationally speaking, the personal side of the house is already ready to make the change. It takes longer internally to get the SME to get started. So in many institutions, P2P starts, and what we try to do is we try to influence so that there is a roadmap towards the commercial, the corporate side of the house to incorporate these solutions. So we have one set of solution that covers both lower P2P value transactions and larger ticket like the ones we were discussing today.
Awesome,
Thank you
awesome,
for the
awesome.
question.
Yeah, that was a great question. And there's another one here that I think maybe was not very clear for one of our participants. Why do you use ACH to disperse transactions? What is the benefit? I think that you
Yeah,
should or you would like to explain your own
good
network,
question.
powerful scaling.
Yeah. So we need to reach, today we reach over 99% of bank accounts globally. Um, and the only way for us to be able to do that is to be able to reach everyone. And if you don't use ACH, the alternative would be to do bilateral integrations with each financial institution or find an aggregator. Um, so that becomes a challenge because there is solutions from competing entities that are called bilateral. So you need both the receiver and the sending to be part of this ecosystem, but it's very, very difficult to scale. Um, so the way like in the correspondent banking and Swift world, the way they were able to attain that uh, scalability was through having a network of thousands. I would be I don't want to say hundreds of thousands, but definitely thousands of banks connected to this network scheme. Us, it's so much easier. We just connect to one ACH and in each country, and that ACH already has the connections to all the different endpoints. So it's a reason to be able to scale without having to go one by one.
Mm-hmm. Awesome, awesome. We're running out of time, guys, so please download the report. I will make you the last question here. Well, now we're receiving more of them. Do you do pre-transaction validations to avoid reject or returns? And ACH is often slower versus a regular wire transfer. And do you have
Yeah.
any comment about these two questions, David?
Yes. Yes. So good. There's two separate questions. So I'll start with the second one, and then I'll go for the first one. Um, so yes, I mean we have depends on the ACH and RTP. There are RTPs that are instant. Call it, imagine SEPA instant in Europe, where it's instant. So you can get a success or a decline right away, and you're good to go, right? And some of them are 24/7, some of them are not 24/7. So if you have real time 24/7, that challenge that you were mentioning doesn't really apply because you can get the decline. You know that money cannot move right away. On ACHs, you do have some dependencies, depending on their hours of operation and the time that it takes to clear the transaction. And yes, at some points, instead of it being instant, in some markets, it could be T plus one. So that covers the first one. Is in some instances there is that delay of the T plus one. That's why we don't reach 170 markets in real time, but only 70 plus. We are at the discretion of those ACH, and we're hoping that as markets start to develop, they upgrade their infrastructures to real time payment schemes. With regards to validations, there is I think there's two sides to that question. There is a compliance side to that question, and then there is a validity of account question. So on the compliance side, we so we do have to do validation on the compliance because we're a licensed entity. We do not do it on behalf, meaning the sender and the receiver are still compliant to do their own sanction screening and validation on lists. If we are not talking about compliance, but we're talking about more, are we sure that the money will arrive to the checking destination? That's something that it's on the roadmap for us in some markets. And there is, just so you know, this applies also for SWIFT and correspondent banking. When you're sending money, you want to make sure that the account is live and the account is owned by the right individual, right? So that's something we're working on with different providers, and it's in the roadmap for us to continue to enhance our platform to be able to have those pre-validations ahead of conducting the payment, so that you can avoid the situation you're avoiding is money that doesn't get posted but gets placed on a to be reviewed section and then gets returned. With a pre-validation, you can get that fixed before the transaction leaves. So that is something that it's on the roadmap and absolutely a great service that will be added hopefully in the future.
Awesome, awesome. Thank you so much, David. And we are out of time, unfortunately. Thank you all for your participation today. We really look forward to continuing this conversation. So you can find our credentials and contact emails in the report. If you have any doubt, if you want to, again, we can do one-to-one presentation with your institutions. We can share more information, whatever you can ask us. And again, remember that we are having a Spanish version of this webinar tomorrow and a Portuguese version in the following week. So if you have any further question, of course, you can also join us and ask everything you want in those webinars. David, thank you so much for
Thank
your
you.
valuable support.
Of
And
course, it
thank
was, it
you,
was a pleasure.
everyone. Thank you, everyone, and
Thank you
goodbye.
all. Thank you, Ignacio, for
Bye.
sharing the stage with me.
Absolutely.